Today we're talking about life insurance, and I want to start off by having you kind of go through a thought exercise. Why don't you go ahead and take stock of your current financial situation, you and your family, what you've got going financially, the plans that you have for the future, and the trajectory that you're on. I hope you like what you see there when you look at it. And if you're on this financial planning journey, hopefully you have a concrete plan to progress and improve. Now in that, I now want you to imagine if you were to suddenly pass away, how would that impact that plan? How would that impact the financial trajectory of your family? Now, if you kind of take yourself there, pretty quickly you go, man, if I were to pass away, maybe my family would be up a creek financially. And so hence, you have this need for life insurance. We all know life insurance is something we've heard growing up informally. It's something maybe our employer offers at work. But today we're going to kind of do a deep dive, take the magnifying glass and hover over this topic of life insurance to get a little bit more detail. Once it's clear to you, oh my goodness, my family does have a need for life insurance, your next question there is, well, how much life insurance should I get? So the bulk of this video, we'll be talking about the different categories of things you may want to keep in mind when you're determining how much life insurance coverage to have. So I'll start by saying this, as with most things financial, the opinions vary on this, right? And there's different approaches that you could use. So I'll just propose one that's really helpful, really customizable and easy to remember. It's actually an acronym, DIME, D-I-M-E, debt, income, mortgage, and education. And as I go through each of these topics, keep in mind your situation is very particular, right? And so results may vary. I want you to take very much of a select all that apply approach to each one of these categories, because depending on your stage of life, one or all or none of these will apply when you're thinking about life insurance. So keep that in mind. Let's start with D, debt. So some people take an approach to life insurance, which is kind of minimalistic, which is, hey, if something happens to me, I just want to make sure our household debts are paid off. That will kind of give my surviving family members a boost, get the credit cards paid off, all our loans, pay off our cars, and that will kind of help out with the monthly cash flow situation. And from there, they should be good. So that's kind of the baseline approach to life insurance, is just handle all household debts. So next up, we've got I, that stands for income. So some people take kind of an income replacement approach to life insurance. And so here's what they do. They go, okay, I make this annual salary per year, and I expect to work this many years until retirement. And they do that multiplication to get a nice clean answer to the question of how much life insurance should I have. Now that's a nice approach because it gives you a nice clean answer, but you want to kind of keep in mind a couple of questions. So one, are you the primary breadwinner in the home? If the answer is yes, maybe this approach should take precedent, right? So it's really important for you to replace your income for your surviving family members. If you're not the primary breadwinner, that again, select all that apply, you may or may not choose to include this calculation in your total insurance need. Next stop, we've got M, and that stands for mortgage. Now I want to point out a mortgage is a type of debt, which was the D in DIME. I realize that, but the point is some people go, you know what, it would be really nice for my family to be able to have their housing needs paid for, whether that's paying off a remaining mortgage balance, or whether that's maybe buying a home and paying cash if you don't already have a home. So the M, right, the mortgage is this idea of housing and getting all that taken care of and factoring that dollar amount need into the overall insurance coverage. And finally, we've got the E in DIME, that stands for education, right? So some people have kids and want to make sure they have their college expense taken care of. So they'll go ahead and add to the overall insurance coverage the projected cost of the kids going to college. So let's take a step back. You've got DIME. Again, select all that apply. Let me point something out. Depending on your life stage, as I mentioned, you want to mix and match which of these apply best to you. And then also want to point out, this will change over time. As you come across different life stages, your need and your family's need for life insurance coverage could change. With that, when you're determining an amount for your coverage need, keep a couple things in mind. First off, in general, younger the better. When it comes to putting new life insurance coverage in place, younger the better. Okay, and by that I mean if you go out and shop for a life insurance policy, you're going to go through this process called underwriting, which the insurance provider determines, what is the likelihood, what's the risk of you actually passing away, and they're going to price the cost of that life insurance accordingly. family. And so younger and healthier, the better as far as lowering the cost of the insurance. Another thing to consider is your employer likely offers life insurance as part of your benefits package. Okay, so you can factor in the coverage that you get through work into your overall life insurance need. Maybe that's totally sufficient for you. Maybe that's covering just a part of the overall need, depending on the different components that went into you calculating the overall amount. Now, the risk there is, of course, if you change employers or in between employers and you pass away, that portion of your coverage obviously would not be in place. So you want to keep in mind the overall need and then how you're going to meet that need from the different sources, whether through life insurance through your employer or through kind of a private separate policy directly with the insurance carrier. I want to address something. If you're sitting there thinking, man, Seth, this process of determining life insurance need, it seems very imprecise. I'm with you. Okay, so I just want to tell you the tools that financial planners use to actually calculate life insurance is much more precise. Okay, I'm just educating you if you were to try and do this yourself. But what we do, right, in our financial planning software is we have a pretty nuanced and sophisticated model of your finances, both current and future. And we project out your current expenses, your future expenses. That includes these items of debt, mortgage, education. That includes your income, or if you were to pass away, it excludes your income. All right, and within the context of this sophisticated model, we can run what's called a gap analysis, where we run a scenario of your premature passing, and we can actually solve for any additional life insurance need that you may have. And so there is a more precise, sophisticated way to go about this. That's where you would engage a professional to actually do that for you. In the absence of that, you can use the DIME approach to approximate your need. Now, one thing we did not address in this video, we'll cover in a different video, which is, okay, I know how much life insurance I need. You go to shop for life insurance and you realize, oh my goodness, there's all these different types of life insurance. So we'll cover that in another video, term life versus whole life, pros and cons and costs of all of that. So be on the lookout for that video as well.